Hello everyone, Gianni DePoci here with you for TheoTrade, and today is Tuesday, the 18th of February 2025. We are on the shortened trading week since markets were closed yesterday for President's Day, and so we're kind of treating this like a Monday for trading purposes. And one of my things about Mondays in markets is that it's probably the least important day of the week. And the reason I say that is because I'm a big closing price guy. And so, by consequence, Friday's close is the most important piece of data on a weekly basis for me, just as the daily close is the most important piece of data on a daily basis. So, with that being said, kind of just taking a step back today and letting the market do its thing. There's really not much to report. It's a bit of a timid Tuesday here as you check out the S&P 500 futures, pretty much spinning at or near the high still. We're still consolidating on this resistance zone of what looks to be an ascending triangle pattern. And this is very important because it helps us break down what is happening within the context of the trend. Now, the trend in stocks remains undoubtedly up. We see nothing but higher highs and higher lows across all different time frames. But ever since we had that high in mid-December, stocks have been spinning their wheels. They've been going sideways, consolidating, chopping up a lot of traders in this chop. And we've seen sentiment surveys become extremely negative. And the amount of bears that we have in this market are very high right now. And it's very interesting to take that into account since we're just a couple percent away from new all-time highs. But as a stock market bull, that is music to my ears. But I wouldn't be surprised if we spun our wheels for a couple more sessions here, maybe into the later part of this week before finishing on a strong note and potentially even starting a breakout to new all-time highs. I'm actually looking at the S&P 500 rallying as high as 65.50, 66.50 once we break out of this range. My bias again is to the upside. When it comes to the Nasdaq, a little bit of laggard behavior today, meaning that it's down while the S&P is pretty much flat, but that's okay. And as I'm about to explain to you in a moment, I think the bigger story of what's happening in this market right now is not in the United States, it's abroad. That being said, some very important things domestically happened as well. Last week, the top performing sector in the S&P 500 was technology. Technology once again today is outperforming, and that really has played into our bullish outlook on the software sector specifically. But again, it goes a bit further than that because if you look at some of the Magnificent Seven names, okay, earlier in the day, they were pretty much all down, save for Nvidia. Nvidia's up, and it did fill that gap down from back on January 24th, which is a really good sign. But if you take a look at Amazon, it's lower. Google is lower. Netflix, technically not Magnificent Seven, but it is lower. Microsoft is lower. We're seeing a lot of selling in the Magnificent Seven. But what I need you to do now is to kind of tuck that idea of the Magnificent Seven outperforming back somewhere in the corner of your mind that you can access it when necessary. But I want you to have this other phrase in your mind, okay, this other label, and it's the Terrific 10. The Terrific 10. What is the Terrific 10? These are the 10 largest Chinese tech stocks. And as you see here in the US, the various indices are low or down slightly or flat on the day. China is up 0.5% on the day. Okay. And you look at some of these Terrific 10 names like Alibaba. Okay. Alibaba up 1.5%. We shared a trade idea in Theo's live room on that name, and it's working so far. You have Tencent Holdings up 4.5% on the day, showing some really strong buying activity. BYDDY, okay, kind of like China's Tesla. This stock has been absolutely exploding up over 30% just in the last 2 weeks. Okay, so big things are happening. You also have names like Baidu, a little bit weaker. That's down today. JD down today. But the point I'm trying to make is that we're seeing money flow into these Chinese names. In fact, NetEase is one of my favorite, and it's a trade that we've looked at within the Trinity trade and the $1 Million Challenge as well. So a lot of these setups in these Chinese tech names are outperforming. They're up on a day where U.S. stocks are doing little to nothing. And that to me says that a lot of buying is taking place. Nobody likes China right now. It's under the radar. It's just starting to get some initial attention. We are very early. And if you zoom out on this FXI chart, which by the way, we had talked about this, it outperformed SPY in 2024. A very quiet, under the radar type of outperformance. But we know that this market can run to the upside and significantly when it takes off. Okay. I wouldn't be surprised to see select names within China, these large cap names. I wouldn't be surprised to see 50 to 100% rallies in some of these names over the next 3 to 4 months. It's looking that strong. And I think that if you're seeking outperformance, if you're looking to outperform the market, which is what I look to do, you can't be shy. You have to look abroad. That's where the greatest opportunities are right now. You're not going to get the best setups, the best trading patterns, the best setups I'm seeing right now are coming from China. So ignore it at your own peril. In other areas domestically, gold seeing a nice rally here. We kind of spent the last few days going sideways near the highs. To me, that is bullish price action. You know, there's a lot of rumors and concerns swirling about a bank run, a gold run happening in London. And now there's, rumors online. Are we is Doge gonna audit Fort Knox and see if all the gold's there? So, you have Elon talking about that online, but I really like what's happening in silver here. We are in the final days of the March contract, going to be rolling to May next week, but it's looking pretty strong. We did have quite the bid on Friday, only for it to sell off into the close, but the weekly chart here looks mighty appetizing, and we've been playing the move in precious metals. Did a special presentation on that specifically back in January. And you take a look at some of our names like Agnico Eagle Mines and AGI. Okay, they've been holding up pretty well. GDX, the gold mining ETF, has been looking pretty good. Silver mining still trying to come out of its rut, but I like what's happening there. I expect it to be a more persistent theme for the first half of this year, at least. If we take a look at crypto, seeing some selling here in Bitcoin. I wouldn't be surprised if we saw Bitcoin test 88, 90,000. But I think that probably could turn out to be a low of significance. Ethereum also down after starting off in the overnight future session with some nice rallying. But that's okay for now. If we take a look at bonds, giving back some of Friday's gains, but we did come up off a higher low in bonds. That is a very important sign. I think rallying bonds, lower interest rates in the United States will be a massive tailwind for the tech sector domestically. That's probably why XLK was the top performing sector in the S&P last week, but it's also going to help China. Okay, if you look at China, what happened when you had this big explosion higher in prices in September, that was right around the time the Fed started cutting rates. Okay, the Fed started cutting rates right here, and China really took off after. Remember, all markets are connected, and so if the Fed is easing, it's probably going to help other markets as well. Here you have crude oil still hanging out in no man's land. I'm not really too excited about crude oil as long as we're below 76, 78. Above there would have to change my thinking up. But the dollar still holding up, still showing its resiliency, highlighting that it is a lot more than just interest rates. It is a lot more than tariff policy. It is a lot more than government spending. You have to tie it all together and realize that these various policy decisions are offsetting one another in real time. We see the euro down here as well. But all in all, a really timid start to the week here on Timid Tuesday. But I'm just going to hammer that point home. I think China is the place to be looking for opportunities. We've already started taking some trades on it. We started, in fact, back in January when we began buying shares of Kifu Technology, which to me still looks like one of the strongest names over in China. And I don't think the story is anywhere near hitting that point of like mass awareness. We're still very early, and I think you'd be wise to be following the developments over in China very closely. So that's all for now, everyone. Thank you so much for watching. Hope to see you in the TheoTrade chat room, and I'll catch you next time. Thank you.